If you've got a profitable business and cash is building up in the company, you've probably wondered, what do I do with all this money? Do I take it out and pay personal tax on it? Or do I leave it sitting in there? Or is there a smarter way to use it? My name's Ben Elliott. I'm an accountant and business owner. I've been helping business owners make smart decisions about their money for over 13 years. And one of the most powerful strategies I use with clients in this situation is something called a bucket company. I personally use this strategy to save $944,000 in tax when I bought our office property. And I'm going to walk you through exactly how it works so you can see if it makes sense for your business. And let me start by explaining what a bucket company actually is. A bucket company is a company you set up alongside your family trust. Its main job is to receive profits from the trust and hold them at the company tax rate of 25 or 30%. And that's instead of distributing those profits to you personally, where you'd pay tax at up to 47%. Think of it like this. Your trading company makes a profit. That profit gets distributed to your family trust. And now the trustee of that family trust has to decide where that profit goes. This is where the bucket company comes in. Instead of distributing all the profits to you personally, where you pay tax at your marginal tax rate, you distribute some of it to yourself and your family to use up the lower tax brackets. Maybe that's $45,000 each. And then the remainder goes to the bucket company. So let's say your trust earns $500,000. You might distribute $45,000 to yourself, $45,000 to your partner, and maybe $45,000 to adult kids if they're in the business or beneficiaries. The remaining $365,000 goes to the bucket company, where it's taxed at 25 or 30%, depending on a few different factors. If you'd taken that $500,000 personally, everything above $190,000 would be taxed at 47%. Now, that's a massive difference. The money sits in the bucket company getting taxed at 25%, and you invest it in property, shares, or whatever makes sense for your wealth strategy. The beautiful thing about this strategy is that the money can stay there compounding over time until you're ready to draw it out. When you do, it comes out as a fully franked dividend. That means the company tax has already been paid, and the only difference you pay in tax is between the company tax rate and your personal tax rate. And if you're in retirement and your personal tax rate is low, you might even get a tax refund. I'll show you how it works in practice. I've been working with two brothers who run a trade type business. Back in 2024, they were doing 100 grand in revenue per month. Last month, they hit $250,000 in revenue. So they're doing really well. But here's the problem. They've got $500,000 sitting in cash in their company bank account, and they only need about $200,000 as a buffer for working capital. So they've got a spare $300,000. Not a bad problem to have. But what do they do with it? Now, they could take that money out and use it to pay down their personal mortgages. But if they did that, they'd pay the difference between the 25% company tax rate and their personal tax rate, which is 47%. On $300,000, that's a massive tax hit. We're talking about losing around $90,000 to tax just to get that money into their personal names. So instead, we set up a bucket company. This bucket company sits alongside their trading entity and is owned by their family trust. Now they can move that $300,000 into the bucket company without paying any extra tax, as it's already been taxed at 25%. And they can now use it to invest. They were already renting a commercial property for their business, so we talked about whether it made sense to buy one instead. They could use some of the $300,000 as a deposit and borrow the rest and own the property in the bucket company. That way, it's separated from the risky trading business. We also looked at diversifying into a global equity portfolio, things like the ASX 200, the S&P 500. The idea was looking into broad diversification with maximum return and the lowest risk. So here's what the numbers look like if they follow this path. Let's say they start with $600,000 invested. That's using some of their existing cash plus a bit of borrowing. They also put away an additional $20,000 a month into the portfolio. I'm estimating a 7% return, which is actually conservative given the 100-year average for Australian and US shares is about 10%. In 10 years' time, that portfolio will be worth $4.7 million. In 20 years' time, if they keep doing the same thing, it's worth $12.8 million. That's the power of a bucket company. You're not paying the top tier personal tax rates. You're investing at a company tax rate, letting it compound and build serious wealth for the future. I also used a bucket company strategy to buy the property I'm currently sitting in. Basically, I'd saved up $700,000 and put it in a bucket company. We needed office space and a property came up. So I used that $700,000 for a 40% deposit and stamp duty and other costs. Then I borrowed $1 million for the balance. Now, to get $700,000 cash through a bucket company, I needed to earn $933,000 in profit and then pay $233,000 in tax at 25%. If I'd done that in my personal name or through a trust, I would have needed to earn $1.32 million and pay $620,000 in tax. So right there, I've saved $387,000 in tax just on the deposit. But it doesn't stop there. Over time, I'm repaying that $1 million loan. To repay $1 million through the bucket company, I need to earn $1.33 million and pay $333,000 in tax. If I'd done it personally or through a trust, I'd need to earn $1.89 million and pay $890,000 in tax. So the tax saved on the repayments is $557,000. And the total tax saved using a bucket company is $944,000. Now, bucket companies aren't for everyone because they're expensive to run. You need to have a trading company, a family trust, and a bucket company. That's multiple tax returns every year. So you're looking at between $10,000 and $15,000 a year in accounting fees. So when does it actually make sense? First, you need to be a business owner or an investor. You need to have income that's not just wages. You need retained profits or passive income. Second, you need to be a high income earner. At a minimum, you should be earning $150,000 in your personal name. Here's why. When you earn $150,000, your effective tax rate is about 26%. That's close to the company tax rate of 25%. Some people prefer to push their personal income up to $180,000 or even $190,000 to fill up those lower tax brackets. That's also my preference. But once you hit $190,000, every dollar you make above that is taxed at 47%. That's where a bucket company becomes really valuable. Third, you need the surplus cash. Not just a little bit, but a significant retained profits that you don't need to live on. If you're only making a small amount of profit, just distribute it all to yourself and family members and pay the normal tax. Fourth, this doesn't work if you have personal services income issues. If you're a contractor or a consultant and most of your income comes from your own personal efforts, you're not allowed to redistribute that income into a bucket company. And lastly, this only works if you're reinvesting the money. If you just want to take the cash out to buy a car or your personal home, a bucket company doesn't help you. In fact, it'll cost you more. The whole point is to warehouse your profits, invest them wisely, and let them compound over time. That's how a bucket company works. It's not a loophole. It's not dodgy. It's just smart structuring. If you've got surplus cash in your business, a bucket company lets you invest that money at a low tax rate. Let it compound over time, and then you draw it out later when your personal tax rate is lower. Over 10 to 20 years, that could be worth millions. Now, this isn't something you want to set up on your own. You need to get the structure right from the start, or it could cost you way more than it saves you in tax. If you need help with this, book a call with us. We'll sit down, look at your situation, and make sure you've got the right structure in place. Links in the description below. I'll see you in the next one.